Have you ever seen those posts online of people making money from their laptops and wondered, what on earth are they actually doing? A lot of them are trading Forex, but what even is that? And how can you get started without losing your shirt on day one? Well, stick around, because we're about to break it all down, step by step. Hey everyone, and welcome to Build and Break Free, the channel where we turn complex side hustles into simple, actionable steps toward your financial freedom. I'm so glad you're here. In today's video, I'm going to demystify the world of online Forex trading. We'll cover exactly what Forex is, how traders actually make money from it, and the essential things you need to get started as a complete beginner. By the end of this, you'll have a solid foundation and a clear path forward. So, let's start with the big question. What is Forex? Forex is short for foreign exchange. Simply put, it's the massive global marketplace where all the world's currencies are traded against each other. Think about when you travel abroad and exchange your US dollars for euros or Japanese yen. Forex trading is basically that same concept, but done online and on a much larger scale. The market is open 24 hours a day, 5 days a week. Because as one part of the world goes to sleep, another wakes up. So when you hear about the EUR USD or the GBP JPY, people are just talking about the exchange rate between the euro and the US dollar, or the British pound and the Japanese yen. The goal for a trader is to profit from the constant fluctuations in these exchange rates. Okay, so we know it's about trading currencies, but how do people actually make money from it? It boils down to a simple principle: buy low, sell high. In Forex, you always trade currencies in pairs. For example, with the EUR-USD pair, you're speculating on whether the value of the euro will go up or down relative to the US dollar. If you believe the euro is going to get stronger, you would buy the EUR-USD pair. Let's say you buy it at an exchange rate of 1.0700. If the rate then climbs to 1.800 and you close your trade, you've made a profit on that difference. Conversely, if you thought the euro was going to weaken, you would sell the pair, and you'd profit if the price goes down. It's all about correctly predicting the direction of the market. Now, you might hear the term leverage. This is a key concept. Leverage is essentially a loan from your broker that allows you to control a much larger position with a small amount of your own money. For example, with 100.1 leverage, you could control a $10,000 trade with just $100 from your account. This can amplify your profit significantly. However, and this is crucial, it can also amplify your losses just as quickly. Leverage is a double-edged sword, and as a beginner, it's vital to start with very low leverage, or none at all, until you understand the risks involved. You'll also need a broker, which is an online company that provides you with access to the Forex market through a trading platform. So, what do you actually need to start your trading journey? The good news is, you don't need a Wall Street-style setup with 6 monitors. The barrier to entry is lower than ever. First, you'll need a trading account with a regulated broker. Regulation is super important because it protects your funds. Second, you'll need a trading platform, which is the software you use to analyze charts and place trades. The most popular ones are MetaTrader 4 and MetaTrader 5, and they're completely free. Third, and this is non-negotiable for beginners, you need to open a demo account. A demo account lets you trade with virtual money in real market conditions. It's the perfect way to practice your strategies and get comfortable with the platform without risking a single cent of your real capital. Finally, you just need a reliable internet connection and a healthy dose of patience. This is not a get-rich-quick scheme. It's a skill that takes time to develop. Now let's talk about something incredibly important: the common mistakes that cause most beginners to fail. Forewarned is forearmed, right? The number one mistake is trading without a plan. You need a clear strategy that defines when you will enter a trade, when you will exit for a profit, and when you will cut your losses. The second biggest mistake is risking too much on a single trade. It's easy to get excited and go all in, but one bad trade could wipe out your entire account. A standard rule of thumb in risk management is to never risk more than 1 to 2% of your total account balance on any one trade. Lastly, letting emotions like fear and greed drive your decisions is a recipe for disaster. Fear can make you close a good trade too early, and greed can make you hold a losing trade for too long, hoping it will turn around. Sticking to your plan and managing your risk are the keys to surviving and eventually thriving in this market. So there you have it, a beginner's overview of the Forex market. You now understand what it is, how money is made, what you need to start, and the critical mistakes to avoid. This knowledge alone puts you ahead of so many others who jump in blindly. Feeling a bit more confident? Awesome. The next logical step is to get your hands dirty, but safely. In my very next video, I'm going to walk you through the exact process of setting up your first demo account and placing your very first practice trade. We'll do it together, step by step. If you don't want to miss that, make sure you subscribe to the channel and hit that notification bell. Let's continue this journey from hustle to freedom together. Thanks for watching, and I'll see you in the next one.